Hello everyone and welcome back to another weekly market update of the S&P 500. Trading is like putting together a puzzle, and crucial pieces of our trading puzzle seem to come together this week. So first of all, we have obviously greed in the markets. Then we are looking at a potential deviation on the daily time frame, and also face heavy resistance, key resistance. So let's piece it all together and answer the question, what is more likely next week, breakout or fake out? As always, we want to start our analysis on the monthly chart, so the higher time frames, and the monthly still does look incredibly strong to me. This month already having taken out last month's low. So if we throw on our monthly levels, the question obviously is, are we going to reject at this pool of liquidity or really still go for 4,335 roughly? Adding our monthly boxes, we do have to acknowledge that yes, we have entered a resistance box, target box on the monthly time frame, but nonetheless the most likely draw seems to be 4,335, at least here on the monthly time frame. For more clarity with respect to a potential path ahead, let's zoom into the weekly chart and see if we want to adjust any of our levels and boxes here on the weekly. So what can we say? Looking at our levels, first of all, we definitely want to move this weekly level up here for a new weekly higher low, which now shouldn't be broken if we really want to continue this uptrend strongly. With respect to liquidity, now obviously the most obvious and closest liquidity on a weekly basis lies at our high of last week, so around $4,228. And why this indeed could be of big interest and an important level, I'll show you in a moment on the daily time frame. Adding our weekly boxes, then we potentially want to adjust some of these target boxes as we have formed a new high on a closing basis, meaning, hold on one second, meaning this target box can be adjusted slightly up, starting at around $4,014 now. And if we take the lower target box, this again should be slightly adjusted, moving it up to $3,992 as a starting point for potential area of interest. More crucial and of immediate interest in the next coming of days, certainly, however, is this fair value gap on the weekly. We have been talking about it forever and ever, it feels, but finally we have hit it. We haven't closed it completely yet. There is no need to close it anyways. Nonetheless, we've been waiting for this level to be hit for a long time. So if you are planning on doing business here, meaning short, this is certainly not the time to get afraid, but rather have a second closer look at a potential setup, and if it is still there, then take it. I'm certainly still planning to take a short at this level of around 4,230 for a potential 3.7R risk reward trade if the trade works out like I have planned it out. More detail on that in a moment. The way I see it, we have tapped this weekly opening gap for the first time since we formed it in August 22. Now you might say, well, we have also already reacted from it. However, think about a weekly bar. What does it look like? There are no weekly bars, I would argue, without a wick. So what I'd expect to happen is the following. I'd expect the weekly bar to open, just like you see here in our drawing, then form a potential wick before we really reject. Let's just put this little drawing of mine here. If we assume that our weekly indeed is opening roughly at the same price and then forms this potential wick, it would potentially take us right into my orders before rejecting. Obviously, I'm not trying to suggest that we are going to go down in one go from these levels. However, the idea obviously is clear. I don't believe that we are simply going to go down in a straight line. At least it seems rather unlikely to me. Therefore, my aim for the coming week is to be part of the weekly wick that I expect to close lower as a candle than it opens. To frame this idea I'm trying to describe to you here a bit better, let's go down to the daily time frame. And for the moment, hide our weekly levels and boxes again. So on the daily time frame, it becomes obvious why I titled this video the next days are crucial breakout or fake out, because we've been hitting the same level several times now, and if we don't reject over the next couple of days, then I believe higher prices are very, very likely. First of all, let's adjust our levels. I think we can get rid of this pool of liquidity. However, I would still leave this one in. With respect to aggressive higher low, we want to move it up here to the level of around $4,122, which obviously is in line with our weekly higher low at roughly the same price. I would move up our daily trend last stand level now obviously to the level of around 3,888, because this really shouldn't be broken if we want to talk of a longer term daily uptrend. Finally, let's add our boxes. As you can see, we did over the last week break this fair value gap on the daily and then use it as support. So for the moment, I would say we don't need it anymore. Same for the level of around 4,186 down to 4,180. I would leave it in as a potential support area now. However, of high interest, think about our weekly fair value gap that we've just discussed. We have a daily opening gap plus fair value gap going all the way up to 4,260. And if we don't reject over the first 2 or 3 days of the week at around this level, I think the next liquidity pool on the daily at around $325 is coming for sure. Adjusting our target boxes, what can we see? Same story like on the weekly, we slightly should move them slightly up. This lowest one to around 4,012. Let's repeat the process. I think I anchored them on this swing point here at around 3,970, and then the target box now lines up nicely with this pool of liquidity at around 4,070, which is also why I left it on. Now for aggressive trades during the week, the first potential daily target box that you can mark on your charts starts at around $4,155 for short-term trading potentially. And what do you hopefully also already see that it lines up again, like so often, with a daily fair value gap. So this could be a potential bounce area before another push up. Now, as you know, I'm leaning rather bearish, but let me show you or explain to you why this is. For the simple reason that we are looking at a potential deviation of a squeeze range, as I always call it. Price has been trading inside of this range for over a month already. And before that also for some time in the middle of February. Remember my cheat sheet indicators, we are looking at low volatility, creating this range bound environment. We have our squeeze ranges and we are breaking out of this squeeze range on extreme momentum, overbought momentum. Obviously this alone doesn't mean anything. However, factoring in all the resistance that we are also facing on the weekly chart here, and the fact that we are nearing extreme greed again on the Fear and Greed index, you have to acknowledge that there might be a fake out in progress. Still, all of these indicators obviously are just secondary, and as I always say, something needs to break for you to trade. And this brings me to our final piece, the execution layer for us, the 4-hour time frame. Should we be right about this becoming a potential deviation of the daily time frame, like for example it was over here and also down here especially, then what you want to see obviously is a market structure break. Has such a market structure break materialized yet? No. Look, this is our latest higher low, so this needs to be broken for you to talk of a market structure break. Two passes I could see now to play out over the next couple of days. Either we do indeed open the week weak, break our market structure here on the 4-hour, potentially entering this area of interest that we talked about on the daily time frame, before then pushing up one more time, complacency bounce into what? A 4-hour fair value gap again, lining up with what? A potential 4-hour target box, and then giving us a valid short on the 4-hour time frame. Or potential version 2 that I see playing out, which would be in line with us creating a bit more greed in the markets, is that we push up from somewhere here a bit more, then making this a potential new higher low, in the process creating the potential weekly wick that we've been talking about, and then you break down and you have a very similar entry, or would have a potentially very similar entry again at around 4,200. Or if you're taking a shot like I intend to do, you could potentially be in at 4,230 or as ever high it goes. Because obviously we can't just assume that it is gonna stop right here. It could easily fill in all of this fair value gap and move up to, let's say, $4,260. Summing it all up, let me quickly get rid of these lines here, and zooming out one more time to the daily time frame. I would therefore say that I would answer the question of breakout or fake out rather with fake out. However, remember, as I've said before, for you to trade, something needs to break. If you found any value in my analysis today, then hit the subscribe button, let me know in the comments, support the channel, and hopefully see you in the next video again soon. Bye bye guys.